Corporate tax exemption for investment funds and real estate investment trusts, REITs. Strategic considerations for qualifying investment fund, QIF. Status in the UAE. Under Federal Decree Law No. 47 of 2022 on the taxation of corporations and businesses, certain investment funds may qualify for exemption from UAE corporate tax if they meet specific criteria outlined in the Law and Cabinet Decision No. 81 of 2023. Conditions for investment funds to qualify as a qualifying investment fund, excluding real estate investment trusts. To be considered a qualifying investment fund and exempt from corporate tax, an investment fund must meet all the following conditions. A. Primary activity requirement. The fund's main activity must be an investment business, such as raising capital from investors to acquire and manage investments. Other business activities must be incidental or ancillary and should not exceed 5% of total fund revenue. B. Diversity of ownership. If the fund has fewer than 10 investors, no single investor and their related parties may own more than 30%. If the fund has 10 or more investors, no single investor and their related parties may own more than 50%. Exceptions apply during the first 2 years of establishment with evidence of future compliance. Qualified investment manager. The fund must be managed or advised by a regulated investment manager in the UAE. The investment manager must employ at least 3 investment professionals. Investor non-control condition. Investors must not exercise control over the day-to-day management of the fund. Real estate investment trusts, or REIs, as qualifying investment funds. Real estate investment trusts can also qualify for qualifying investment fund status if the following additional conditions are satisfied. Asset threshold. Real estate assets under management, excluding land, must exceed 100 million AED. Ownership or listing requirement. At least 20% of the real estate investment trust's share capital must be floated on a recognized stock exchange or wholly owned by 2 or more unrelated institutional investors. Real estate asset composition. At least 70% of the real estate investment trust's asset value must consist of income-generating real estate. Tax treatment of investors in qualifying investment funds. Investors must include their share of the fund's income and expenses in their taxable income based on their ownership percentage. Distributions from the fund are not taxed again if already included as part of the investor's income. Application and ongoing compliance. Qualifying investment fund status must be applied for with the Federal Tax Authority. Funds must maintain compliance throughout the relevant tax periods. Non-compliance leads to the fund being treated as a taxable entity from the beginning of the non-compliant period. Strategic considerations for the structure. Ensure proper structuring to meet ownership and activity tests. Engage with qualified investment managers regulated in the United Arab Emirates. Monitor ancillary revenues and investor composition continuously. Consider structuring feeder or parallel funds to optimize investor participation while maintaining compliance. Key references. Article 10 of the Corporate Tax Law, Decree Law No. 47 of 2022, Cabinet Decision No. 81 of 2023, FTA Corporate Tax Guide on Investment Funds and Managers, May 2024.